7:39, the John McComb Show on CKNW. Boughton Law is NW's on-air legal analyst for 2015. They join us from time to time to give us the lowdown on legal solutions in business and in life. They also join us to explain the legal implications behind some of the big news stories that we cover. Well, this morning, Jeff Glazner is joining us, and Jeff is a specialist in tax law, tax dispute lawyer at Boughton Law, and a reminder that our discussion does not constitute legal advice. Jeff, nice to see you. Thanks for coming in.
Thanks, John.
This dealing with the CRA must be a busy practice for you.
Oh, it's something that never stops. It's year-round. There are a lot of people in town with a lot of issues with what's happening with them and how the CRA is treating them. So there's more or less an unlimited supply of work.
It's interesting because most people sort of file their taxes and they're deducted at source and all of that, and so they just get on with it. And if they get a return, great. If not, then at least they don't owe, sort of thing. So tell me some of the cases. What are some of the unique cases that come before you that you have to deal with?
Well, I like to say what I'm dealing with is whatever the flavor of the month was at the CRA a few months back. I see it on the dispute side, so I see it after they go and investigate it or during the investigation. So at a time they were targeting restaurants, and I was dealing with those. I deal a lot with the status Indian tax exemption. So whenever there's a push to start auditing individuals for claiming that,
right.
I see that a few months later. A lot in the construction industry.
That's one of the big things this time around.
It is, yes.
Yeah. So they're literally, it's a moving target.
It really is, but you do get to see these trends, and you get to know these businesses quite well.
And generally, when you fight with the CRA, is it a winning proposition? I mean, as a taxpayer, I wouldn't go there alone, I don't think.
Well, we wouldn't take on any files where there would not be a lot of room for improvement for our clients. There's so much work out there, we wouldn't want to be doing that. Often you find that what the CRA is doing is very aggressive, and when the person you're going up against is very aggressive, there's a lot of room, there's a lot of a gap to cover to improve the situation for your client well beyond, many times beyond what they're paying you in fees. So it's often a value proposition to go forward and dispute your tax bill. And
obviously it's timely now because April 30th is, 31 days away, basically.
Yeah, we're all thinking taxes now. We're starting to prepare our personal returns. We're getting a better idea of what our bill may be if we still owe some money. So it's a good time to start thinking about that.
What if you do end up owing money on April 30th, what are the consequences if you don't pay the tax bill? Perhaps it's too big, you can't manage it, or what can people do?
Well, the practical consequence is you file your tax return, and you're used to getting a notice of assessment back, which says, yeah, you filed correctly, or you missed this is what you owe. Practically speaking, 90 days after that notice of assessment comes, 90 days from the date on that notice is when they can start aggressively collecting it against you.
Okay. And what does that look like?
Well, it depends. There can be a few ways. The CRA has some powers set out in the Income Tax Act for how to collect. They can freeze your bank accounts and seize what's in there. They can, if you're an employee, they can garnish your paycheck. Often we see that at about a 30% level, but at times it can be higher. If you're a small business, they can determine who your clients are and intercept any receivables owing to you by sending official requirements to pay to these clients of yours. Or they can send a bailiff in to start seizing and selling assets if they see fit.
And this is 90 days after the date on the notice of assessment. If you haven't paid or come to some kind of arrangement with them, then they're legally allowed to act.
Correct. And that's for income tax. For GST, or for income tax, if you're going to dispute it, that can postpone the time that they can take the collection action during your dispute process.
Okay.
If it's GST, even if you're disputing it, they can go in and use these powers they have.
Now, can a third party, can a family member, as an example, be held responsible for your debt?
They can,
really?
Amazingly, and we're seeing more and more of that. It may be a sign of the times, but you find that sometimes these tax debtors, they may have some assets in their name, and they may feel it's prudent for perhaps their family situation to move assets out of their name, put them in family members' names where they think it may be out of the reach of the CRA. So perhaps the homeowner is a tax debtor, puts it in the spouse's name. as a gift, essentially. The spouse doesn't pay for it. What the CRA can do at that point is use Section 160 of the Income Tax Act and go after that spouse, that family member, for the greater of whatever the tax debt was of the first family member who transferred the house, or the value of what was transferred to them. And that can go right down technically to husband buying wife a cup of coffee. Go after her for $1.50 of the tax debt.
No kidding.
Yeah.
Do they do that?
I haven't seen it that small yet, but I have seen many, many ways. Mortgage payments, weddings paid for children, cars purchased and gifted away.
Right.
Yeah.
Now, what about if you're a director of a company and the company has problems? Do they go after people like that as well?
They can. So a lot of people are comfortable with the legal proposition that your corporation is a separate entity than you, and if your corporation has debts, they're not necessarily your debts. But if a corporation has GST debts or payroll remittance issues where they haven't remitted on behalf of their employees, then the directors of that corporation can be liable, subject to certain defenses.
How often do you see that happen?
We see that a lot.
Really?
Yeah. The last couple of years, that's come up quite often.
So directors of companies are personally responsible for the debt that the company is.
Right, and that would be subject to a due diligence defense. So what I would come in and talk to the director about if they got one of these notices is, did you do what a reasonably prudent person would have done in your circumstances to avoid this failure, whatever it was? And I'd look for evidence on that. So we would look to see if perhaps they were relying on someone else, if maybe there was a flood in their basement and their records were gone, trying to look for those distinct situations, the factual circumstances that we can argue show that this due diligence defense applies.
Does you used the words aggressive earlier, and is the CRA, generally speaking, when they're dealing with people, aggressive? Do they really try to put people in it's an uncomfortable position to begin with, I think, but is part of that because they can be an aggressive organization?
Well, they have a lot of power, and for most people it's intimidating when they get that phone call or that visit.
Yeah.
These collections officers are the ones who are trying to collect. That's the division of the CRA that's in charge of collecting these tax amounts. They have different styles. Some come across very friendly at first, and some come across very aggressive. But there's a lot of threats and things that can be implied in those conversations by phone or otherwise that can really scare the taxpayer. And what I see a lot is clients come in who have limited English skills. So it's even more difficult for them dealing with this government authority who's telling them they can take their house and seize the car.
Yeah. I'll get you to stand by. We're talking with Jeff Glazner. He's a tax dispute lawyer at Boughton Law, part of our Boughton Law series here on CKNW. When we come back, we're going to find out if there are payment arrangements that one can make with the CRA and some tips for dealing with the Canada Revenue Agency if you do get a letter or a phone call, what you should do next. Jeff Glazner from Boughton Law. More coming up here on CKNW. Our Boughton Law legal series continues. We're talking with tax dispute lawyer Jeff Glazner about what you should do when the CRA sends you a notice or makes a phone call. We talked about payments earlier. Are there any payment arrangements? Like, can you sit down and say, I owe you all this money, but I can't really afford to pay it all in one lump sum. Can we work something out?
Well, you find the CRA isn't very practical, but they are somewhat practical at times. So the Income Tax Act doesn't allow you. You don't have the right to have a payment plan. CRA has discretion to accept a payment plan. So it's usually the product of conversations with these collections officers once they start contacting you on the bill.
Mm-hmm. And so do you have to bring it up?
It generally is you who brings it up. You're not going to have the collector start offering you payment plans. So it's generally you're represented at that point, and someone like me will know how these arrangements tend to work, what's acceptable to the CRA, what's not, what's the gray area in between. Someone like me, I have access to their internal collections manual, which is something I got through Access Information, so I can see sort of the guidelines that they're working under when trying to negotiate these payment plans.
It must be, the tax law generally, at least to me, is so complex that for a tax lawyer, you must have all sorts of stuff packed away in your head just trying to just trying to keep it straight and deal with what can be a very cumbersome process.
Absolutely. The rules are constantly changing on us, so that's why we rely on colleagues and others to discuss changes in the law and changes in practice and procedure.
So if you owe money, will the CRA come along and say, all right, we want to look at all of your household assets, what you owe, expenses, we want a full rundown of your financial picture?
Right. They won't negotiate a payment plan in a vacuum. So one may assume that the CRA knows everything about them and what their favorite music is, what's on their iPod, etc. But often they don't. So when they come to you or you come to them and say, I want a payment plan, this is what I can afford, then they start asking you to provide information so they can judge whether that's really what you can afford. So what you're going to find is there's usually a standard set of financial disclosure documents they'll send you to complete, listing all your assets, liabilities, expenses, income, and generally on a household basis, not just you as the individual taxpayer. Right. And then they'll look at the number at the bottom, what's left over at the end of the day, and they'll use that to judge whether what you've proposed is something that's workable for them. If they look at that list and look at your expenses and see that you spend $1,500 on entertainment a month, then they might question that, start insisting you cut back on that and add that extra money back into what you're paying them towards your bill. Right.
Well, when the tax man comes knocking, what should you do? Now, if you owe money on April 30th, from what I can recall, the advice is to make sure you file your taxes, get the filing in, and if you owe something, then go from there. But don't not file.
Absolutely. That's very good advice. There's nothing criminal. There's nothing wrong about not being able to afford your tax bill. There is something potentially criminal down the line about not filing your tax return.
Right.
So filing the tax return is always a key component there. Worrying after that about how you can pay it, that's when you start looking at your options. But certainly you should never not file that return out of fear of not being able to pay it.
And when they call, don't ignore them. When the mail arrives, don't ignore it because it ain't going away.
It isn't going away, and it's only going to get worse. So make sure you open that mail. There's deadlines in there. There's people you need to phone back. If you ignore them, they're not happy about that. Mm-hmm. You need to communicate properly with them, and usually that's through a representative.
And if it's too complicated, then they come and see people like you and say, I need some help with this.
Yep, we get cold calls all the time. I get 3 or 4 a day on this subject alone, and it's something we can often walk these people through, whether they need a lawyer or not.
Good stuff. Jeff, I appreciate it. Thank you for coming in.
Thank you, John.
Jeff Glazner, he is with Boughton Law, tax dispute lawyer, and once again, the discussion does not constitute legal advice. If you want to learn more about the Boughton Law series, you can find that at cknw.com. The major news to 8 o'clock is coming up next on CKNW and the John McComb Show.